Hello, namaste everyone. This is Rupi Raja and today I will give the NFO review for ICICI Prudential Nifty Top 15 Equal Weight Index Fund. Before starting the NFO review, I would like to give a disclaimer that the opinions and facts given in this video is not financial advice. The disclaimer is given to clarify that my content is for informational and educational purposes only. While I share my analysis and perspective on stocks and mutual funds, I am not a certified financial advisor and everyone's financial situation is unique. The disclaimer ensures you understand that any investment decision should be based on your own research or guidance from a licensed financial professional. As equity markets carry high risk, it's all about keeping things transparent and encourage responsible investing. So before talking about the ICICI Prudential Mutual Fund, I would like to explain what is an NFO. NFO stands for New Fund Offering, and a new fund offer is the first time an investment firm offers a new mutual fund to its investor. It is just like an initial public offering, but it is for mutual funds for retail investors. Talking about what are mutual funds. A mutual fund is a financial vehicle that pools money from many investors to invest in a diversified portfolio of securities such as stocks, bonds, gold, and other assets. Investors buy units or net asset value units in the mutual fund, becoming partial owners of all the mutual fund holdings, and a professional fund manager manages that portfolio on your behalf and an expense ratio is charged for it. So, talking about the ICICI Prudential Nifty Top 15 Equal Weight Index Fund, you can see over here in the slide the launch date, end date, exit load, and allotment dates are given here. The ICICI Prudential Nifty Top 15 Equal Weight Index aims to replicate the performance of the Nifty Top 15 Equal Weight Index by investing in the top 15 companies by free float market capitalization within the Nifty 50 universe, with each stock equally weighted to reduce concentration risk. So, assume that if you invest 100 rupees in this index fund, then this 100 rupees will be equally divided among the top 15 Nifty 50 companies. This ICICI Prudential Nifty Top 15 Equal Weight Index Fund is a passive fund and it is subject to tracking errors. Tracking error means that this index fund by ICICI Prudential will give lower return than the actual return of the top 15 equal weight index. This scheme is managed by Nishit Patil and Ashwini Shinde, and they have managed passive funds very well, and even the fund house ICICI Prudential is very good. Talking about the Nifty Top 15 Equal Weight Total Return Index, this index includes the top 15 companies from the Nifty 50 based on the free float market capitalization. Each stock is assigned an equal weight, which is approximately 6.67% if you try to divide 100 by 15. So, this ensures that it reduces the dominance of large companies like HDFC Bank or Reliance Industries, which may have higher weightages in market cap weighted indices like the Nifty 50 Index Fund. This equal weight index approach enhances diversification by minimizing concentration risk. So, for example, in the Nifty 50, HDFC Bank weightage is around 8.37% in the Nifty 50 Index Fund, but in an equal weighted index, it will be closer to just 1.92% as seen in the Nifty 50 Equal Weight Index. This equal weight index is rebalanced quarterly and reconstituted semi-annually to maintain alignment with the market leaders. Talking about the valuation of the index, as of May 29, 2025, this Nifty 15 Equal Weight Index was trading below its 3-year average price to earning ratio, suggesting attractive valuations and a potentially favorable entry point for long-term investors. This Nifty 15 Equal Weight Index has outperformed Nifty 50 in 5 out of the last 10 years, so it is not a bad index fund. Talking about the return expectation, the 10-year CAGR has been 14.15%, and I feel that this is not a good return because if you invest in Nifty 500 index fund, then you can also get a return of 13.1%. So it is just 1% above the Nifty 500 index fund. The taxation of this ICICI Prudential Nifty 50 Equal Weight Index Fund is like all other equity funds, but you should note that this tax structure can be changed by the government of India in the future. Talking about my opinion, I am not a fan of passive mutual funds, so I will not invest in this NFO. If you are a passive fund investor and a conservative investor with a net worth of 10 CR or more, then only you should invest some part of your portfolio in this NFO. Rest of the other retail investors should rather invest their money in a large cap focused actively managed mutual fund. So, talking about suitability for different investor types, if you are a conservative investor, then yes, you can invest in this NFO. Even if you are a balanced investor or a goal-oriented investor, then yes, you should invest in this NFO because it will help you meet your goals and it is not very volatile. If you are a passive investor, I will humbly request you to stop investing in passive funds and I would suggest you to go for investing in active funds for high returns. And as a result of which, as a passive investor, you should not invest in this NFO. If you're an active investor or a young investor, you should skip this NFO. If you're an aggressive investor, then also you should skip this NFO and you should go for large cap actively managed mutual funds. If you're a diversified investor and you have allocated good percentage of your portfolio to gold, large cap, mid cap and small cap, then you can ignore this NFO. If you're a speculative investor and you want to trade for the short term, then also I would suggest you to skip this NFO because this scheme will not give you bumper returns in the future. If you want to read about the scheme details for this mutual fund, I have attached them in the description of this video. So before ending the video, I'd like to promote myself. If you want to book any consultation related to investment, portfolio consultation, mutual fund advice or stock advice, you can connect with me on LinkedIn. And on LinkedIn, you can directly message me for consultation details. Note that I am not a certified financial advisor yet, so I won't recommend specific stocks to buy or sell, but I will provide valuable perspectives on what I would have done if I was in your position to help you make informed decisions on your portfolio. So that's a wrap on today's NFO deep dive. We have covered the numbers, dissected the story, and now it's your turn. What do you think? Drop your thoughts below, hit that subscribe button, and let's keep decoding the market together. So hope you like this ICICI Prudential Nifty 15 Equal Weight Index Fund. Thank you. This is Rupi Raja.